It's the 29th of September. I'm Arthur Falls, and this is episode 16 of Beyond Bitcoin. Today, Justice Ranvier returns to discuss Monetas, a startup he's involved with, which is building on top of the Open Transactions protocol. We also dig into crypto equities, reputation, arbitration, and the informal economy.
Right now, I'm actually in a closet, or I think in Europe they call them hotel rooms. Yeah, I'm over here in Switzerland meeting with them and onboarding new employees, helping them get up to speed.
So you're in Zurich, right?
Zug.
Zug.
Like 20 minutes out of Zurich, I think.
Oh, cool, man. Awesome. That's pretty flash, working with a company called Monetas in Zug, just outside of Zurich.
Right.
I can see like the little grin at the corner of your mouth.
Well, it's still a small company. I remember when it was only 3 people. But yeah, they have an awesome name.
How long have they been operating for?
Well, I believe they've been operating for 2 years. But like before, about 6 months ago, it really was just fellow traveler and Johan, the CEO and CTO and co-founders. I believe they had one other employee, and it was only in the starting in about April or May when they really started ramping up. They did their second round of fundraising and started hiring more coders, and they're still in the process of ramping up now. I believe the company's around 20 people now.
20 people?
I believe so. Yeah, bringing in more all the time.
That's awesome, man. I had no idea that they were kind of snowballing like this.
They've just kind of been off the radar, in a lot of the Bitcoin media. They're not doing the kinds of things that some of these other projects are doing, so you don't quite, you don't hear about them as much.
I mean, there are certain things that really appeal to the media, but Monetas is, I think we were talking, I was talking to the guys at Hyperledger for the last episode, which will probably be a few episodes prior by the time I publish this. But yeah, it's like they had this really awesome pragmatic concept that just wasn't something that kind of inspired a lot of media attention, or the fanfare that comes around some of the altcoins that people can buy into. And this I really wanted to talk to you about your article, Lex Cryptographia, which is probably yet another mispronunciation. But how about we talk about Monetas for a bit, seeing as you're probably a good person to talk about them.
Yeah, Open Transactions is the signed receipt system. It's an open source, open protocol. Monetas is a commercial software company that's building apps for Open Transactions and also funding the open source development on Open Transactions. Well, Monetas's biggest products are really going to be products for businesses, not necessarily commercial products for end users. So they're producing some Android and iPhone apps for interacting with the OT signed receipts, and they're also producing the component of vote for voting pools, the audit server. The system that does the cross-checking of receipts and that interfaces with the Bitcoin or other cryptocurrency wallet. The way that the average Bitcoiner would interact with Monetas is when voting pools launch, we'd expect to. We've already seen some interest with some Bitcoin exchanges to use the voting pools as their system for accepting and managing customer deposits. So that really affects the average Bitcoiner in that they're less likely to get their Bitcoins robbed off an exchange.
Well, how about you? How does that mechanism lead to greater security for Bitcoin storage?
It means that more people have to collude to steal or lose your money. So if you remember a year ago, everybody trusted Mark to hold their money, and one guy acting alone could steal everyone's money or lose it or miscode a wallet. We don't really know where the Bitcoins went. In a voting pool, the responsibility for the customer deposits are split up amongst multiple parties, and not just multiple parties in one company, but multiple parties in different companies across different jurisdictions that are all business competitors. so that the bar to collusion is higher. Now, it doesn't mean that thefts and losses are impossible, just means that they're less likely. So instead of a single point of failure in trusting on Mark's integrity and coding skills, you're relying on a group of people who all have the incentive to make sure that none of the people in the pool cheat, because they would lose their own money too.
Oh yeah. Well, there you go. That's the project that you're involved in.
There's Monetas has hired a lot of coders, but I don't know if you've noticed, but experienced Bitcoin programmers are kind of in short supply at the moment. So we have a lot of really experienced developers from a lot of them are from Canonical or Rackspace or, people who've done a lot of development, but they're still new to Bitcoin, new to open transactions, and new to voting pools. My contract is to produce the documentation and support to kind of help them get up to speed so that they know what they're building.
How are they getting their funding?
They are funded through traditional investment. So Monetas has raised. They've done two. I think they've just completed the second round of fundraising, and they're about ready to go into round 3. But it is a privately held company. The founders are, they're giving away their equity, to raise funds to pay the coders to produce the products. But they don't. They plan to keep the company private and to, sell as little as equity as possible. But it's being funded through traditional means.
That's real, but you sure that they won't produce a token for us at some stage so we can all just grab a little slice of the pie?
Well, it would be really hard to do a token system. Like Open Transactions itself is open source, so there's nothing that a token would add. There's all of the function is there without tokens, so they could add a token to Open Transactions, and then people could just compile it out and use it without the token. So the kind of tokens that we've seen, in these other projects would not work in Open Transactions at all.
Well, if they're doing well without it, it kind of lends a bit of the legitimacy. Excuse me. It lends a bit of legitimacy in that they haven't bought into the just the frenzy of enthusiasm that's boiling around crypto equity, which is dubious in its justification. And
right. My personal opinion is that everyone should stay as far away as possible from these things. I think they're bad news, and I think it's going to just end badly for almost everyone. But I should mention at this point, I am a contractor for Monetas, so I don't speak for them in any way.
That's probably prudent. So when you say end badly for all these people, I mean, you're speaking to one of them. So how do you envision that end might come about?
Well, basically, what we've seen with a lot of altcoins, right? There's a hype cycle. They go up in value. The hype cycle ends. They go down and never come back up. That's for the IPO investors. The more general problem is that a lot of these tools are being built before there's a real need for them. Like crypto equity, like issuing stocks, in a Bitcoin company is, or at least issuing the stocks as cryptocurrency tokens, is premature. Most Bitcoin companies are not going to be profitable in, say, Bitcoin terms. Like if you invest 1,000 Bitcoins in a startup, you are unlikely to get 1,000 Bitcoins back in terms of your return on investment. That might be profitable in fiat terms, but very, very few companies can be profitable in Bitcoin terms. It's hard to generate a positive return greater than the long-term growth of Bitcoin.
A growth which has been pretty dismal this year.
It's just a few months. We saw this before in 2011. We saw it in 2012. It happens.
It won't stop us from feeling depressed, though, man.
Oh yeah, that's part of the cycle. But really, would you borrow 1,000 bitcoins on a 5-year loan?
No, no,
Well,
of
no,
course
that would
not.
be insane, right? There's, for one thing, there's no need for crypto equity markets yet because there's no like maybe the gambling sites that earn revenue denominated in Bitcoin, maybe they have a positive ROI in Bitcoin terms. But until there's a real Bitcoin economy going, there's no real need for equity markets yet.
Well, on that note, the mention of the Bitcoin economy, because this is what I wanted to talk to you about last time I had you on here, and but there's so much to go into, and you certainly provide a useful counterpoint to a lot of attitudes that are out there, certainly a lot of my own. We wound up talking about all kinds of things last time. When I was reading your article Lex Cryptographia, at the start of it, you quoted Christoph Atlas, and he said, oh no, sorry, that was in Only the Black Market Matters. And he said, those of us who do not participate in the underground economy are often unaware of its breadth. It grew to include one half of the world's workers by 2009 and is projected to include two-thirds of workers by 2020. So that's a huge, huge undocumented workforce, or that exists as a potential market for these tools. I guess what I'm wondering is how much of Bitcoin's market penetration is taking place in that sector, and also how much do you think is taking place? How much of the transaction volume is taking place in the dark market sector?
Well, I would imagine that Bitcoin is doing pretty well in the underground economy. Last time I checked the stats as in terms of new sites that have popped up to replace Silk Road, the last time I heard there's over 2 dozen of those now. So that's quite a bit of growth that's happening. In terms of transaction volume on the blockchain, I have no idea. I don't even know how I would begin to track that.
Yeah, I've read a lot of people complaining about what's taking place with the new, with the new decline in value, and a lot of them blame it on merchant uptake, in which people are transacting in Bitcoin and then immediately converting into fiat. Also, miners converting immediately into fiat. But those two things just can't possibly come close to the volumes that are transacted in the dark markets, which, for me, kind of, it really colours my understanding of how this economy is forming and emerging.
Okay. Well, I want to say one thing about who's dumping on the exchanges. I want to remind everyone we don't actually know that those exchanges have all the bitcoins that are being sold. Right? Until something like voting pools with real-time auditing, comes in, it's entirely possible that one or more exchanges is, selling bitcoins that don't exist.
And that's what was going on at Mt. Gox, presumably, right?
It was either that or they were buying bitcoins with dollars that didn't exist. I do think it got to the point where, as far as anyone could tell, they only had actually 200,000 bitcoins ever, but the customers thought that they were owed 800,000 or something like that. But it's so confusing. There's like this fog around that. Nobody really knows what's going on. Probably that's delivered by somebody.
So anyway, let's go into Lex Cryptographia, because that's what I've really been looking forward to exploring with you, and the emergence of this informal legal system. And you based the article, which is on your blog. What was the address of your blog, by the way?
Bitcoinism.liberty.me.
So in that article, you looked at Lex Mercatoria, the merchant law that emerged during the Wayback Ages, and compared that to an emerging law in the crypto sphere. Could you talk about Lex Mercatoria and how that relates to Lex Cryptographia?
The short answer for Lex Mercatoria was that there was a lot of trade going on, and there was a lot of disputes that would arise as just a natural course of trade, because we're humans. Humans don't always agree on everything, right? And the government, or I guess it would be like the king's provided courts, were not sufficient or suitable for resolving all these disputes. And so because there was a market need for dispute resolution and it wasn't being provided any other way, or there were no barriers to providing it via the market, then this voluntary court system emerged. When you have a kind of voluntary court system, it can't enforce its rulings in any traditional sense. But in this kind of marketplace, like what they had at the time, reputation becomes extremely important because the value of reputation actually increases when there's no enforcement capability. If you can't send send some of the king's armed soldiers after somebody who owes you money, then if you don't have that to fall back on, you have to be extra careful about who you do business with, because if they decide to rob from you, you have effectively no recourse. So the fact that reputation becomes so important when there is no enforcement means that a court doesn't need armed agents to enforce its will. If you get the reputation of someone who doesn't honor your contracts, and if as long as the court maintains a system of, or a reputation for fair and honest dealing, you're hosed if you can't do business with anyone because they don't trust you. That's the kind of basic dynamic that goes on.
And how do you see that translating into the cryptographic space?
Well, we do have reputation systems already. They have some degree of effect. Like once you get a good reputation on a trading site, your trading becomes more profitable. I spent a lot of time last year on local Bitcoins, and because of that profile and because of that time investment, I have a lot less trouble finding reputable traders than I did, or I'd say finding the most advantageous trades now than I did when I started out. So that's an example of a reputation system that's already working. The Lex Cryptographia blog post that I wrote was based on some conversations we'd had with people in Austin, some of them that went on to form the Nakamoto Institute, and we thought about combining the idea of insurance and reputation. So if you have a reputation system that works fairly well, one of the ways that you can improve on it is if people who don't have reputation yet can offer up a performance bond as an alternative, or as a way to compensate for their lack of reputation. The other thing that does is it enables increasingly larger deals, right? There tends to be like a comfort limit. When you're talking about small transactions, people are more willing to rely on reputation. But as deals get bigger and higher value, there comes to a limit where they're less comfortable accepting reputation alone. And if you have a system that also allows you to augment reputation with performance bonds, that would give those people in those markets access to those deals. It's self-insurance on contract performance.
There's a lot of reputation systems out there, but there's nothing that advanced. You know what I mean?
I can't really say too much about how it exactly would be implemented, because before it can exist, there would need to be the marketplace that it serves. Right? So maybe OpenBazaar would become that marketplace or something like that. But the marketplace comes first, that generates the need for it, and then based on what that marketplace looks like would come the exact implementation details. Right? Like you don't need a dispute resolution for this marketplace that doesn't exist yet.
No, but wouldn't it be fun to build one?
Sure. But yeah, and actually after I wrote that post, I had I don't know how many people wanting to fund a startup, even some people who wanted to fund a dispute resolution token. But yeah, it's all premature. First, you have to have the marketplace of the people who need this, need this service, and then you build the service. All right, it's like building it prematurely is a solution looking for a problem.
Okay, I thought you tied the shoes before you put them on your feet.
Yes, a lot of people try that, but I'm gonna buck the trend on this one.
Oh, good on you. This is really aimed at dealing with problems like the long con and Sybil attacks.
Yes, that's it's a way of helping with that, right? Because I would imagine in the future long cons would be rarer because right now we're kind of the crypto ecosystem or the economy is in its infancy. It's very small, so you can always do a long con there and leave, and there's this whole other fiat economy waiting for you to fall back on. 20 years from now, probably not going to be the case. But while we're in this transition period, there are people who don't appreciate the value of establishing a reputation because maybe they don't believe that Bitcoin and online free markets are going to last. So they'll squander their reputation for a short-term payout. So yeah, in that case, performance bonding is one way to mitigate that. So if somebody's willing to put up a bond on their contract performance, at least that time you can be pretty sure that they're not trying to scam you then.
Certainly, you'd presume that there'd be sufficient disincentive.
Right. It would be based on the value of their bond, right? If they would stand to lose more from that bond than they gain from not fulfilling their contract, then you can be pretty sure they're going to fulfill the contract. Or if they don't, then at least you're not out anything monetarily.
But you still have, because if those bonds are going to be voluntary, the Sybil attack issue still exists on a certain level, doesn't it?
Right. You would want to make sure that the arbiter who's responsible for releasing that bond isn't the same or colluding with the person you're trading with. So yeah, it doesn't completely eliminate the Sybil attack problem, but it moves it around a bit.
That's a good segue into discussion about arbiters and also these third party actors who participate, providing trusted feeds or arbitration services, maybe adjusting values to or prices where necessary. What are your views on how an arbiter might play?
Well, I think you could build a future system where arbiters are not randomly, but kind of semi-randomly chosen. Right? You could build a market for arbitration services. And because the arbiters don't handle the value directly, I don't believe they have the same incentive to collude. Right? If their only revenue is coming from these small arbitration fees they get per transaction, and if they if people demand more identity information of their arbiters than they do of their people they're trading with, then the incentives for an arbiter to throw away their reputation are lower. It would mean you'd have to pay them more to corrupt them. And in this kind of system, you can't get cryptographic protection against human action. Really, it's just not there. The best you can do is say, well, we can raise the price of bad behavior so that good behavior is more profitable. And that doesn't mean there will be no bad behavior, but it just means that over time, the trend will be towards more good behavior.
And it's that incentivizing that is really the crypto economic way, isn't it?
Well, more than the crypto economic way, but I would say that that's the free market. The free market is when all the incentives are aligned for cooperation and honest trading.
How do you see from the point where we are now, where we do have some economic activity, how do you see that transitioning through an avenue like Open Bazaar to the world at large? I mean, could you give us a roadmap?
So what I would expect to happen is that over the next few years, especially in the Western countries, you're going to see more and more economic distress in what was traditionally the strong economies, and the people who are not in the political elite and their immediate set of servants they're going to have their standards of living fall. Either it's going to be inflation, or it's going to be deflation that causes joblessness and just a lack of money circulating in the economy without the corresponding lowering of barriers to entry and other things that would allow the economy to adjust. So if you look at like the Latin American economies, you see where you have this very small, rich elite and everyone else lives pretty much hand to mouth. I would expect the United States and Europe to, over time, start to resemble that more and more often, more and more. And so as that's happening, people are going to get desperate, and they're going to lose some of their scruples about the informal economy, and they'll start doing. People already do this. They'll do like unpaid handyman work under the table. They'll just do jobs for cash, right, to earn a little bit of extra cash, and they won't report it. That's already something that happens in times of economic distress. And what Bitcoin and these other associated tools are doing is it's opening up the possibilities for that. If you're a knowledge worker, for example, that's something that can be delivered online. You can have customers on another continent. And what's different than, you could have done that since the internet was invented, but what's different now is that you can get paid. So this is, it won't be just people doing manual labor, for cash under the table. It will be knowledge workers doing the same thing for, high value or generally high paying work.
Because we're beginning to see that a little bit with things like Odesk and what was Amazon's service? Amazon has a service where small tasks can be farmed out.
It's called the Mechanical Turk.
Yeah, the Mechanical Turk. Bizarre name.
Yeah, it's. I think it's this reference to like an old magic show trick or something.
Do you see this kind of activity increasing through decentralized services that perform the functions of, say, Mechanical Turk and Odesk?
Yeah, I think there will be a lot of platforms that emerge that enable these, and they don't even really have to be that complicated. I mean, go to Reddit and go to Jobs for Bitcoin. A lot of activity there, and I've had some success with Jobs for Bitcoin when like I have a question that I don't have time to research or something. Just post a bounty there, and usually I get a response within minutes. There's a lot of people out there eager to earn Bitcoin with their work, and that amount is only going to go up over time. And they'll find venues and ways to meet, and there'll be lots of platforms.
What have you been keeping your eye on recently? I mean, what out there is really getting you interested right now?
Well, OpenBazaar is the only one that I'm more than just vaguely aware of, and I don't really have time to even really keep up with that, other than I know that it's making good progress and believe it's getting close to a release.
It's a pity because there's this awesome platform, BitSquare. I spoke with one of the guys, or with the guy, Manfred Correa from that, and he had a great idea for an arbitration platform where two people could enter an exchange and put up a bond for that exchange, and an arbitrator could facilitate it.
Right. Arbitration is it's a service for a market, and so the market doesn't exist yet. Like, you don't invest in gas stations until the automobile's been invented, and a lot of people have it. Yeah, you wouldn't want to design a gas station before you know what cars are going to look like, right? You might have the wrong spigot on your your hose, and yeah, I understand that there's a lot of interest in arbitration. Well, this is actually something I've noticed in Bitcoin since at least 2010. There's a lot of people who want to do I guess I could say the easier work, the stuff you can do on a keyboard, and less people interested in the hard work of actually running a business. Like actually getting your hands dirty, dealing with customers, earning money on low margins just by consistent work every day. That's actually what builds the economy, though. The people who open a grocery store and keep it open and keep it stocked, and every day deal with all the hassles of running a business. Millions of people in that create an economy. And sure, economies need kind of support services like arbitration, or maybe they need equity markets. But those things serve an economy. They don't form an economy. So there's generally a lot more interest in doing those support roles than there are people actually wanting to build the primary economic activity. I just get a picture. I remember seeing some image macro float across of some troll guy with standing on a metal bar using magnets to lift himself up. That's kind of what I think of with this. Everybody wants to be in these support roles, and no one wants to do the primary economic activity.
I guess the idea is to build something that will attract people who do want to do that baseline economic activity. Maybe people in Argentina.
Right, and I do think that's a good approach. So you focus on what are you define a market. So the market that makes most sense right now, I guess there are two you could focus on. You could focus on the Silk Road type markets and try to look at that customer base, see what they need, and build the platform that works for them. And with the fact that there are like 30 Silk Road replacements right now is indication that that's already happening. So maybe that field's kind of full at the moment. So the next thing you look at is the international online freelancer. Then you build something like that for them. So somebody who wants to offer their skills to customers in other countries, get paid in bitcoins, or probably bitcoins, maybe something else, and have all the support tools they need to make that experience beneficial to them. And I don't know really too much what OpenBazaar is working on right now, but hopefully they're considering that as one of their primary use cases. So somebody who's a writer, a programmer, an artist, those kind of jobs, how can they advertise to potential clients and invoice and get paid and handle disputes?
That's really the core issue, isn't it? Is building some kind of central infrastructure where people can find a way of trusting the people that they're working with, or at least that, or not having to rely on that trust. Which sounds like a truism, but in fact, it's not something that we have as of this very moment seen any progress in.
Yeah, everything's kind of ad hoc right now. I don't know of any unified platform that gives you advertisement and payment and dispute resolution all in one place.
The other thing as well is the consistency of the behavior of arbitrators. We need to be able to transact in a way where the results of our transactions or mistransactions will be, are reliable. It's that reliability that raises another concern about the behavior of arbitrators. Do you have any thoughts on how that might be codified?
I don't know about codified, but there would be reputation for auditors, or not for arbiters, especially when, as an arbiter, the only thing you have to offer is your reputation. There is no other product there, right? So if someone's offering to sell you a car, you're gonna buy a car with them. They're gonna have it shipped to you. Your desire to get the car might they might be just such good car salesmen that your desire to get the car overwhelms your caution in looking at their reputation, right? Because they have a car and they have their reputation, and you're evaluating both. With an arbiter, there's not that same dynamic, because the only thing they have to offer is their reputation. So it simplifies the process of, or the decision-making process.
The product that they're selling is reputation itself.
Right.
Do you have any grand view about what's going to take place for the rest of the year?
I don't know that the rest of the year is enough time for any grand plans. To me, this period in Bitcoin feels a lot like second half of 2011 and 2012. right? There's a lot of infrastructure being built out, a lot of good news, a lot of things happening behind the scenes, but there's no exciting price action. Well, I guess it is kind of exciting, but not the excitement that everyone's looking for, right? So we don't really know when this is going to end, but all of this infrastructure that's being built is not just going to disappear. Bitcoin is going to continue to become more useful. More people are going to enter the crypto economy. The actual economic fundamentals are just going to continue growing. What that turns into in terms of exchange rates, who knows?
Given that, what do you see for next year? I mean, what's really got you excited about what's happening next year?
I can't. Well, hopefully the voting pools is going to be a very positive launch. Ideally the software launch will go smoothly and perfectly, and there will be no problems, right? So that would be something to be excited about. But I guess I don't see any giant breakthroughs. I see a lot of steady progress and continual improvements. If 2015 is really exciting for Bitcoin, I would expect it to be driven by like external events. Another major banking crisis, people getting their bank accounts frozen and confiscated, bail-ins. Those would be the kinds of things that would make Bitcoin really exciting. If we started to see mass flights to safety out of fiat into Bitcoin because of economic or geopolitical events.
Yeah, well, I mean it's kind of that whole thing that Bitcoin benefits from bad news. So I'm always very torn when I watch the news, and particularly surrounding political instability. I'll edit that out.
I believe it was Andreas Antonopoulos. I might be misattributing this quote, but the basic idea is that to win, Bitcoin does not have to defeat, the dollar. It just has to survive longer. So we're not seeing any indication that the euro, the dollar, the yen are going to survive. I mean, the damage has been done. We just don't know what the timing is. So as long as Bitcoin survives, continues to withstand any attacks against it, and by Bitcoin I mean the whole economy surrounding it, it just has to be the last one standing.
It's kind of a Mad Max kind of view, but I suppose that's it. That's quite astutely put.
I guess my medium-term future for the United States of America is that it goes the way of the USSR. The debts become unpayable, the situation becomes untenable, and then one day you woke up and you've discovered that this empire that everyone thought would last forever just voted itself out of existence one day. And then it kind of clears the way for market-based mechanisms to come in and rebuild. So I don't see it as a Mad Max. Mad Max is like, oh, the government collapsed and then society collapsed. But no, it's more like the fall of the USSR. The government of the USSR collapsed, and then the healing could begin. They don't have bread lines in Russia now. There was a transition period where things were a little rough for 6 months to a year, maybe, depending on where you were at. A lot of people who were very used to pampered and privileged lives had to kind of come back down to earth. But on the whole, life got better, and the economy got better. So when I talk about the USA dissolving like the USSR did, I see that as a sign of that what will come back beyond is better.
Thanks for listening, guys. Cesis provided the music. Feel free to contact me at beyondbitcoinshow@gmail.com. Pertinent websites can be found in the show notes. Today's magic word is monetas. That's Monetas. Catch you next week.